Hi, this is Laurie Way coming to you from the shores of Lake Union in beautiful Seattle, Washington, where I am a real estate broker with Coldwell Banker Bain. Today I wanted to just take a couple of minutes to talk to you about 5 quick and easy ways that you might be able to save money either on your monthly payment or on interest over the life of your loan. Number 1 is refinance. If you refinance like a lot of people did about 5 years ago when interest rates dropped to 5%, then you might be able to talk to your lender about refinancing. If you refinance at today's current interest rates, which are at historic lows, you can save a lot of money on your monthly payment and on the long-term interest. So say for instance you took out a loan of $400,000 5 years ago, 5%, and your monthly payment for principal and interest would be about $2,147 a month. If you refinance at today's current interest rates, the balance of that loan, your monthly payment would come down to $1,701 a month, saving you approximately $446 a month. Fabulous. And then you also will save $122,000 in interest over the life of that loan. Number 2, shorten the life of your mortgage. If you refinance and if you can afford just a little bit higher payment in 15 years, in a 15-year loan versus a 30-year loan, you can save tons of money over the long haul on your interest. So let's take that same $400,000 loan, 5% 5 years ago, refinancing to a 50-year loan now at current interest rates. Your payments will only go up $346 a month, but you will save $286,000 over the life of the loan, plus you pay off your home in half the time. So 15 years would be nice to have your home paid off for just an extra $346 a month. Now if you can't obligate yourself to make those extra payments or make the higher payment, then go ahead and just make extra payments. Pay when you can. Just pay a little bit extra. Check with your loan to make sure that there's not prepayment penalties, but there usually isn't, but check just in case. And go ahead and put $50 here, $50 there. If you get a bonus, put $800 into it. You'll be amazed at how quickly that brings down your principal, because all that extra stuff goes into your principal, not your principal and interest. So say for instance the Federal Reserve Board did a study and said if you had a $200,000 loan at 6% and you paid $50 extra a month, that's just $50 extra a month, you would end up saving 3 years. You'd pay your house off 3 years earlier and save over $270,000 in interest. So again, something to really look at. A lot of times, you know, people's lives change. You get married, you get a raise, you pay off your car. Take that extra money and put it in to go against your principal of your home. Number 4, eliminate the dirty word PMI, private mortgage insurance. When the credit crisis happened, everything kind of sucked up. You know, all the lenders sucked everything up, and there weren't any really good options for this for the last several years. But now things are starting to loosen up again. Talk to your lender. See if there's something that you could do. Some people call it a second mortgage. There's other, you know, names for it. Different lenders have different programs. But basically what it is what's called an 80-10-10. So 80% is your first loan at regular great interest rates right now. 10% would be on a second, or whatever that name is that your lender wants to call it, at a little bit higher interest rate. But the fact of the matter is that interest rate, check with your CPA, I'm not one, and check with them and see, but it is usually tax deductible for the interest rate on your second, whereas PMI is not tax deductible. So another great way to save a little bit more money and get rid of paying that PMI every month. Last but not least, check the value of your home. Call your broker. Any good real estate broker is going to be able to give you a good price opinion on your home right now. And then check and see what you're getting taxed on. If that tax assessed value is more than what your market value is, then go ahead and call your tax assessors at the county and find out how you can challenge it. You can get on to their website and find out how to challenge that. And it's not going to be a lot of money, but it's going to be a little bit of money that puts that dollar into your pocket instead of somebody else's. So that's a very quick overview of 5 ways that you can save money either on your monthly payment or on your interest rate. And if I can be of any assistance, please feel free to call me or email me. And until then, I'll see you next time. Thanks.